Just ahead this week on Money Matters, Korea's stock markets have been recording new highs along with many other indices around the world. Is the market overheated? She-make, the heavenly marriage of Korea's fried chicken and beer, sweeping up countless crowds in China. And Japan's push for wage hikes, will it actually give the economy the lift it needs? What stories matter in Asia? We'll look at the changing landscape of business in the region next on Money Matters. Hello everyone, I'm Hans Schadl. Here are some of the top business stories here in Asia this week. President Park Geun-hye has been traveling across South America this week, seeking to boost Korean exports and business development opportunities. On her list, she has Colombia, Peru, Chile, and Brazil, and the Korean president will be meeting with the leaders of these countries. She's joined on this trip by 500 business executives from 125 companies, making this the largest of President Park's trips overseas so far. This trip is expected to give trade between Korea and South America an extra lift. Korea's publicly traded companies have reached a new milestone. The combined stock market capitalization of Korean firms has increased by more than 10% this year. This means Korea's combined market capitalization is now the 11th highest worldwide, up one notch since the end of last year. So far in 2015, Korea's stock market is the fourth best performer among the top 15 stock markets worldwide, behind China, Japan, and Hong Kong. China's economy grew at its slowest pace in 6 years for the first quarter of this year, leaving Beijing trying to figure out the right policy mix to jumpstart activity. Gross domestic product in the world's second largest economy grew at 7% in the first quarter of this year, slowing from a rate of 7.3% in the fourth quarter of last year. Recent cuts in interest rates and efforts to prop up the sagging real estate sector haven't had much impact besides fueling the stock market boom. The Shanghai Composite Index has doubled since last July and hopes the Bank of China will come through with an economic stimulus package. Japan has now overtaken China as the #1 holder of U.S. Treasury bonds. Both China and Japan have been cutting back their holdings of U.S. Treasuries, and China has sold off more than Japan, so Tokyo has moved back into the top spot. China became the top holder of U.S. debt back in 2008, surpassing Japan when the United States pushed up government borrowing to cope with the economic crisis. These days, China has less money to invest overseas as it grapples with slowing growth at home. And oil prices have shot up dramatically in the past week, recovering from the lows set earlier in the year. West Texas crude oil futures opened this week trading at $56 a barrel. That's up more than 25% from the recent low at $42 a barrel. Falling oil inventories and conflict in the Middle East country of Yemen have spurred the rally in the energy sector, but oil prices could fall again, given signs that oil production in the United States is not leveling off as much as expected. On our front page this week, we're looking at the recent boom in the global stock markets and the implications of this.
Stock markets around the world have been on the rise, with many indices setting new records. Korea's Kospi broke through the 2,100 mark just last Tuesday for the first time in 4 years. While on Friday, the tech-heavy Kosdaq surged past the 700 line for the first time in over 7 years. Out of the 15 countries around the world, 13 equity markets, including Korea, China, and Japan, reached new heights since the 2008 global financial crisis. In the case of China, the Shanghai Composite Index grew about 25% just this year, breaking new records in 7 years. In the first quarter, China's markets raised $5.4 billion in subscription funds for IPOs, surging ahead of those in New York and Hong Kong. In Japan, the Nikkei briefly traded above 20,000 earlier in the month, the first time in 15 years. On the global scale, market capitalization rose by $5 trillion last year, according to Bloomberg, putting it above $70 trillion. Meanwhile, Korea's market cap is set to stand at roughly $1.34 trillion, the 11th largest in the world. Key stock markets around the world have been enjoying an influx of money since the 2008 global financial crisis. But will this boom continue?
Now to take a closer look at this issue, and especially at the Asian markets, we're joined via Skype from Montreal by former Secretary General of the Organization for Economic Cooperation and Development, Mr. Donald Johnston. Thank you very much, Mr. Johnston, for taking time to speak with us. As we just heard in the taped piece, China's market has been seeing rapid growth. In the case of Japan, it's seen 90% growth over the past 2 years, and Korea's markets have been rallying as well. Why the boom in this region, in your view?
That's a very complex but important question. I think you have to recognize that there are a lot of things happening in the global economy which are beyond anybody's control. One aspect of that region is that where there is some instability, some confrontation between various countries on different rather small issues, by and large it's quite stable, and it represents probably the major motor going forward of the global economy, especially Northeast Asia to this date. China, of course, remains a major locomotive. People say, well, it's only at 7%. Well, how many of us would like to be at 7% economic growth? Now, admittedly, it starts from a lower base. But the reality is that China, I think, is getting its act together. Xi is attacking corruption. That's impressed, I think, many of us in terms of China's future because it's terribly corrupt and it's affected its overall economic performance. And of course, for Korea, China is its largest trading partner by far. So we see a dynamic that's happening in that region of the world. And I'm very optimistic that it will continue to be a major locomotive of the global economy. And the stock market is unusually hot in China. Japan, as you point out, has done very well indeed. Korea is okay, but Korea is a much more developed economy like Japan. So you don't expect it to have the same kind of economic growth.
So some experts have called this surge a mirage, cautioning against a bubble in the Asian markets. Do you see such signs of danger as well?
Well, I think the important thing is to ensure that if it's a bubble, that it deflates slowly and does not burst. And I think that I think it's the central bank governor Zhu, who was in Washington this past weekend at the IMF meetings. You may recall that, because it just happened, that he basically has reduced the reserve requirement by 1%, which should allow for greater liquidity and even more lending, and possibly, at the same time, more people investing in the stock market, which some people seem to want to encourage. Others in China, the Regulatory Commission, have taken a different view. I think they want to increase the margin requirement to keep people from overborrowing to go into what is already perhaps an overheated stock market. There are some who probably would rather see more of those savings directed into other areas of the economy which would stimulate growth and investment. And here we have a division amongst economists, which is not uncommon. The ones who want to have even greater stock increases probably think that this will create wealth, which in turn will find its way down into the small, medium-sized enterprises and others who are who are needing capital for expansion and develop export markets. Others will see it as contributing to what might turn out to be a bubble.
So do you think we can expect steady growth in the Asian markets going forward? What are your expectations here, Mr. Johnston?
Well, I certainly hope so. And my my major expectation is that Korea itself will be a major beneficiary of that. I have enormous confidence in the Korean peoples, and they are uniquely placed, both geographically, technologically, education-wise, to take advantage of Asian growth. China, as I think we said a moment ago, is Korea's largest trading partner. Japan is also the third economy in the world. India is growing. So I think that Korea is uniquely well placed to take advantage of the growth opportunities which are bound to occur throughout the Asian region. It is by far the most exciting area of the world from an economic point of view to be in today.
Well, thank you very much, Mr. Johnston, for your time. We really appreciate you taking time to speak with us from Montreal. That was Donald Johnston, the former Secretary General of the OECD, joining us via Skype in Canada. Time now for our Bits in Biz segment. And of course, trends in business evolve rapidly by the day. We have some of the most eye-catching stories online now with Yoon-hee. Hello, Yoon-hee.
Hello. Right. So today I have an assortment of recent bits in business that you may have missed. Let's first start with something that has the smartphone community abuzz. Now, pre-orders for the new Galaxy S6 series are now available in most countries, and so far the sales point to a major accomplishment for Samsung. So far, 15 million pre-order sales of the S6 and 5 million sales of the S6 Edge have come in, and many carriers in major countries like the US have already sold out. Now, the new S6 line models are gaining quite a bit of attention for their revolutionary features. But one of the hottest news about the new Galaxy S6 is the option of the Avengers Special Edition. Fans can customize their phones under the theme of the various heroes such as Iron Man, Thor, Hulk, and so on. Now, this comes at a time when the highly anticipated blockbuster is debuting around the world. Now, moving over to some news regarding a close neighbor. China's one-child policy resulted in a mass of families with only one son. But what about families with only a daughter? Why have they been catching the attention of Korean businesses? Many of these only daughter families tend to be on the wealthier side, but it's their daughters, especially those born after 1980, who really know how to spend the money. These young women love to travel, but they also show particular interest in online shopping, opening up new opportunities for Korean companies. Now, a recent China media conference was held in Korea to discuss the idea of targeting Chinese consumers. And the hottest topic there was the idea of catering to a market aimed at China's only daughters and the spending willpower of these young women. Now, it's not just the only daughters in China that Korean businesses are after. It's also the chicken lovers that Korean fried chicken joints are after as well. Take a look at this next report.
Last year, Korea's hit drama, My Love from the Star, created a sensation, not just in Korea, but also over in China. Taking the country by storm, it ignited one trend in particular, and that's the massively popular chimek, where diners can enjoy Korean fried chicken and beer. Money Matters sent a team to Beijing to see the extent of this craze, and around each corner of the city, we found Korean fried chicken.
因为受那个电视剧《来自星星的你》的影响，然后在那上面看到的，然后觉得就是炸鸡配啤酒，感觉挺好吃的，然后就慢慢的就喜欢上了。
一个星期会来2回，而且就是如果有一些学生我们在一块聚会的话，会来的次数会更多，而且这里的环境非常的好。
Whether it be night or day, these Korean chicken houses are pumping out sizzling, fresh fried chicken for every day of the week.
一天大概用个鸡的话60只左右吧，这个去骨鸡腿，因为这个卖的比较多一点，差不多100斤左右每天。
Daily sales have peaked above 3,000 yuan, or roughly $500 a day, for some chicken houses, sparking some to seek out opportunities in this new market for Korean fried chicken. This trend is also catching the attention of young entrepreneurs as well, with many wanting to enter this market.
제가 보기에는 전화번호 한국인 전화번호 잡지에 반 페이지는 치킨집인 것 같아요. 다른 브랜드에 비해서 또 맛도 차별화가 되고 특히 이제 소스 같은 거 간장 소스, 마늘 소스, 소스의 종류의 폭이 넓잖아요. 그런 영향 때문에 아무래도 맛의 폭이 넓으니까는 많이 와서 찾으시는 것 같아요.
Currently, major Korean fried chicken franchises can be found in some 60 different countries around the world. The chimek craze is growing at a rapid pace, with a bright future ahead.
Yoon-hee, this is making me very hungry seeing all this delicious fried
Order
chicken
some
here.
after the show.
Indeed. Maybe why wait? Have them ordered for the studio, I guess.
Exactly.
But we wouldn't want to do that to our desk. Is this really all because of this one TV drama creating this craze?
Right. Interesting concept there. But before Korean fried chicken was actually introduced to China, it said that fried chicken was available in the market through various fast food joints such as KFC. But as we heard from the owner of the chicken house in Beijing, the different flavors have really contributed to turning that attention away from the other options to the Korean fried chicken joints.
And my understanding is this is becoming a global trend very quickly.
Right. So Korean fried chicken is rapidly expanding around the world. So over in the U.S., there are actually roughly 500 Korean fried chicken joints available. And one major company has said it plans to expand and open over 2,000 branches in 35 different countries around the world by 2023.
So this is very good news, Yoon-hee, for a lot of our viewers overseas that would like to have some fried chicken the next time they're watching Money Matters.
Much more accessible. But let's leave that there and move over to some other news taking place in Vietnam. Now, a country famous for its abundance of scooters is now seeing a new trend. People are opting to trade in their 2 wheels for 4. With economic growth of over 5% since the year 2000, a new middle class is emerging in Vietnam, and people are leaning more towards cars than the popular scooter for transportation. Although attributed to the pace of economic growth, some say it's also because of the new image-conscious young generation. They want their success and wealth to be reflected in their lives, and one such means is through the cars they drive. And some recent speculation over India's e-commerce market. There's of course been chatter about India being the next China with massive potential growth. But some feel that India's e-commerce market is a bubble waiting to burst. Now, it's estimated that the market will be worth over $50 billion by 2020, and while some believe it may not last, some are actually saying that the potential is very real. Now, the Swiss global financial company UBS recently released a report attributing certain factors such as the acceptance of technology by the younger generations, internet accessibility, as well as a growing middle class as reasons that the market will come to full fruition.
Well, if we have all those online bookings, Yoon-hee, something big is changing here.
Right. Some interesting facts there.
Great.
Keep an eye on that.
That's our Bits and Biz segment this week with Yoon-hee. Thank you so much, Yoon-hee.
You're very welcome.
Have laid out plans to increase their wages.
We'll turn now to our keyword for this week. And if you're watching us from outside Korea, you might have not heard this word before, homo debtians, or humans of debt. Now, this is a phrase that's been coined over the past couple of weeks by local business journalists here in Seoul in response to the general conditions that have been created by the Bank of Korea and many other central banks around the world, keeping interest rates rock bottom, very, very low, record lows, for instance, of 1%. And there's a logic to all of this that has big economic ramifications. You keep interest rates low, then it's cheap to borrow. And if it's cheap to borrow, then when you borrow, you can invest that money and put that to work. You can buy stocks, buy houses, buy businesses, and you can make more money from these investments than if you've just got the cash sitting in the bank, earning next to nothing in terms of interest rates. So low interest rates for savers, you get nowhere with your investments. Low interest rates for borrowers, on the other hand, very different story if you invest the money well. And there's the risk with this keyword, homo debtians. If the investment goes well, you're doing great, but investments don't always perform well. Stocks fall, businesses fail. And if you're using borrowed money to make an investment and that investment goes downhill, then you might be in big trouble. So this keyword, homo debtians, also suggests risk as well as opportunity. Time now for our Asia in Depth segment, and we're going to focus this week particularly on Japan, where companies recently have been increasing wages for their employees, quite different from policy here in Korea, where wages continue to be relatively flat. To find out more, to look at the business and political ramifications of all of this, our own Saw Miserong made a special trip to Tokyo. Here's her report.
One of the issues gaining the most attention in the world of business in Japan is wage hikes. To the extent that starting last year, Prime Minister Shinzo Abe has been pressuring large companies in the country to raise their wages.
賃金支給総額の増額や設備投資、協力企業のコスト上昇の価格転嫁といった積極的対応が求められた。
The Abe administration here in Japan has been urging some of the country's largest firms to increase their salary levels. And following this, some of the leading names such as Toshiba, Nissan and Toyota have laid out plans to increase their wages.
The first to respond was Japan's leading automobile manufacturer Toyota Motor Corporation. The company announced a 4,000 yen raise in the monthly base pay, which is roughly $33, the biggest pay increase in 13 years. A string of other big companies, including Nissan, Honda, and Fuji Heavy Industries, followed suit and agreed to record high raises of their own.
経済界としてはですね、収益の拡大を図ってそれを賃上げに結びつけていくと。
Altogether, Japanese firms have raised their monthly wages at the fastest pace in 17 years, and most people seem to believe in the effects.
そうですね、その賃金を引き上げる分にはいいとは思うんですけど、働いてる身としては賃金引き上げていただいた方がやっぱ働く意欲もあるので賛成だと思います。
Now, how were these major companies able to raise their wages?
So now yen is very weak, which is very good for Japanese exporting companies. Right? For these reasons, now as many Japanese, especially big companies, their profits are really increasing.
In times of economic expansion, there's an upward cycle of growth leading to increased income, which then translates into a boost in spending and further growth. By raising wages, Japan is trying to enter this upward cycle and revive its slow economy.
物価上昇を大幅に上回る実質賃金の上昇ということが、期待できますので、それが消費を大きく押し上げるということはほぼ間違いないと思うんですね。
Korean businesses are also being called on to raise their pay levels for workers. Finance Minister Choi Kyung-hwan has been pushing for wage hikes since the beginning of this year.
적정 수준의 임금 인상이 일어나지 않고는 이 경제, 특히 내수가 이게 살아날 수가 없다 이렇게 판단에 따르고.
In line with this belief, wages of public sector workers will be increased by 3.8% this year.
가계의 소비를 살아나게 하려면은 임금을 증가시킨다거나 아니면 좋은 일자리를 그러니까는 늘려주거나 미래에 대한 그러니까 불확실성을 제거해 주는 수밖에 없습니다. 그러니까 임금 증가라는 것은 그러한 이제 그 유급한 어떤 하나의 진단 속에서 나온 처방이라고 할 수 있겠습니다.
But those in the business circles are less enthusiastic. They say wage increases are burdensome and that most businesses simply can't afford it. Samsung Electronics, the country's largest firm by market value, went further and announced it would freeze its salaries this year after seeing a steep drop from 5.5% in the past. One of Korea's largest umbrella labor unions, the Federation of Korean Trade Unions, called for a pay raise of 7.8%, but the Korea Employers Federation recommended that its members cap increases at 1.6%.
통상임금 범위 확대와 60세 정년 연장 등으로 기업들의 총임금비 부담은 커졌습니다.
Despite such reluctance from the business sector, many are still calling for higher pay in anticipation of positive economic effects they believe will come with it.
고용률 하락에 큰 영향을 미친다라는 건 일부 사례에 국한되고요. 오히려 최저임금 인상이 저임금 해소에 개선이 되고 이 저임금 비정규직 불안정한 노동자들이 향상된 소득으로 우리나라 내수 경제에 활성화 준다라는 의견이 많기 때문에
The focus will now be on whether Korea will see an upward trend in its wages, and if so, whether it will give the economy a significant boost.
Well, it's interesting to see that Korea and Japan are in two different places these days when it comes to pay increases. I think a lot of us here in Korea will be waiting to see if Korean employers follow suit. That'll do it for our program this week here on Money Matters. I hope you enjoyed it. We'll bring you plenty of stories once again next week as they unfold in Asia and give you a view of the changing landscape of business across the region. I'm Hans Schadl. Thank you again for watching.